Good to go?
Yeah.
Okay. Hello and welcome to Media Snack Meets. You might recognise this fine young man, Brian Wieser from Pivotal. Brian, can you do me a favour and just introduce yourself, please?
Sure. I'm a securities analyst. I cover stocks associated with the advertising industry, including the holding companies, but also including Facebook, Google, even Adobe, Salesforce, traditional media owners like Disney, CBS. And I used to work in the agency business after a brief career as a banker and an analyst before that. Mm-hmm. So I've been the CMO of an ad tech company and try to pay close attention to what's going on in your world.
Yeah, it's pretty interesting. And actually, Brian, you're the first repeat guest I think we've ever had, apart from David Indo.
That's an honor.
Yeah, you are. So we spoke to you, I think, a year before last. That's in right. Cannes. We did a media snack. But we speak quite a lot, and we follow Brian's brilliant writings about, it's kind of the voice of Wall Street really, but for the industry, which I think is increasingly just becoming interesting to people, right? People are referring more to you. Sorrel was on stage in Cannes and made reference to your work, and it's part of the narrative now around the industry. It's really interesting.
That's very flattering.
Good. Well, we love it. It's really good. Really good to have you back. What brings you to London then for this trip?
You guys. Your
Really?
Media Snack 100.
No way.
I decided that you're having an event, and I thought, sure, I can build a trip around that. And
Excellent.
So I did.
Good. Well, Brian's a good one of our 500 or so subscribers that we've got now, so it's really good. Good to have you here. So let's dig straight into it. And we speak every now and again. The last time that I saw you, we saw each other briefly in Cannes this year, but just kind of in passing, we grabbed some lunch. But before that, we were in San Diego together.
You're a naval destroyer.
Actually, I took Brian out sailing on San Diego Bay, and you'd never been sailing before.
No.
So that was an interesting thing. We'll save that story for another time. But we did get honked by, we think, a giant warship at one point and panicked a little bit. So that's for another episode. What was really interesting though about you presented at the ANA's procurement conference, right? And I'd love you to just kind of share some of that. So for those that weren't there and obviously don't know what you said, can you just remind us, because you were talking about how the agencies work and their performance.
Now, there were a number of things I was focused on at the time. One of the points I was trying to make is that you can't rely necessarily on the reported revenues or margins that companies report to assess their health.
Yeah.
And the problem in particular I pointed out was Omnicom, where because they have so many pass-through revenues, my estimate's around $3 billion, or maybe a quarter of the revenue base is associated with what are called pass-through revenues, where they are either a principal or it's some activity that everyone else would not book as revenue. Yeah. So it has the effect of distorting their margins down, and the nature of these activities allow them to have organic revenue growth, which may be, let's say, unassociated with the health of the agency business. And interestingly, this last week, I even discovered an entity called Sell by Tell, which is
an Omnicom.
Just another illustration that 10% of their headcount of all of Omnicom and half the headcount growth of the last decade comes from this business process outsourcing company that helps Cisco sell routers and does customer service for Google at Work apps, totally unrelated to the business.
And how do you deal with that? Do you have to strip out this kind of stuff? I mean, you have to bury yourself in the way that these companies are reporting.
Yeah, and I'm trying to make the point that it's not that these are bad businesses or that this is necessarily a bad thing, but it means that when you see a headline organic growth rate or a margin trend, you have to be mindful that these aren't necessarily apples to apples when you're comparing against any of the other holding companies. And it's made it increasingly difficult to assess the health of the industry when Omnicom's businesses are being run well. We think, but we don't have the transparency as analysts to be able to properly analyze and compare or properly weight it in context of the rest of the industry. I think other holding companies typically provide some color around this. WPP breaks out their net revenues from their gross revenues, which gives us some sense. They talk about pass-throughs occasionally beyond that. And then Interpublic usually calls out numbers. Publicis, I don't believe, has material amounts of this. They don't call it out. But as someone who analyzes the agencies, it's necessary to understand these different moving parts.
And you find it interesting that these companies, they seem, we're in the middle of it. I mean, not in the middle of it, but I mean, we're in the industry, and it's all quite volatile and unpredictable at the moment, isn't it? And there's so many questions, I think, from investors and analysts saying, like, what is happening with these businesses? Because they've been quite a good investment, right? Over a period of time, they've been
off the last little while as stocks. I mean, there has been an issue. I think the transparency issue and the enhanced contract scrutiny has probably been a factor. Zero-based budgeting has been a factor.
Yeah.
The revenue growth has been quite weak relative to prior periods. There was a sudden deceleration starting in the third quarter of last year.
Yeah.
And so the stocks have also fallen off in a relative sense.
Yeah.
But again, I think the bigger point is that we don't really know what the underlying organic growth rate is of the industry if we can't properly analyze the numbers, if we don't get sufficiently comparable numbers.
And is that achievable? Can you get them all to a line, or is that's just the way that they do it and there's no changing?
It's guesswork, but here's the thing. So investors, now our clients are institutional investors. That is the only client base we care about. They're mostly unaware of some of these non-agency revenues or principal revenues. And so there's a distorted view of the health of the industry on the part of investors. And that influences, sometimes mistakenly, how capital gets allocated.
Yeah. Good. No, you're straying into finance language there, so you're going to lose me. Let's get it back at my level. I remember this, something I think that we talked about in the past. Does new business wins, are they interesting from the analysts and investors? Because do they really affect the performance of the business, or is it all just pass the parcel and everybody's just moving business around? Why does the pitches are so interesting for investors?
So investors need data points they can point to, because most holding companies, and really all of them to some degree, are black boxes where you get a little bit of a breakdown of revenues by segment. You don't get everything you really need to properly analyze different sources of revenues. And so when there are data points that come out from third parties on a monthly or quarterly or some other basis, the investment community wants to try to connect them to actual business results. Yeah. New business wins are something you can track. Yeah. What investors mostly don't understand or appreciate is that, firstly, contracts that get renegotiated don't tend to get publicized. Yeah. And which makes up a bigger proportion of the market and the movement than the visible pitches where business changes agency. This is not understood by the majority of the investment community. Yeah. And then, so new business data is out there, and it's something that investors can react to. Yeah. If they happen to be wrong about it being a driver of revenue growth, well, it still will influence the stocks until they're corrected in their points of view. Okay, good. Thanks for clarifying. So this week's a big week actually, because we've had two of the groups publish their Q3, Omnicom earlier in the week, and then Publicis this week. Let me just read you some of these headlines, because for somebody who, we tipple along on the surface and I just read the headlines and you guys kind of dig down to the data, right? Wall Street Journal says, Publicis shares dive on earnings. Media Post, one of the trade publications, says, Publicis Group reports improved growth in Q3. So now I'm confused. And then Campaign in the UK, really sitting on the fence, says strong momentum despite negative growth. So how do you get to make a judgment on this stuff? Because none of that's factually incorrect, right? These are all factually correct. But they're saying they would give you completely different points of view if you were thinking about who do I invest in. The stock fell by 5 or 6% because growth for the third quarter was below expectations. Regardless of what the right number is, it was lower than what the investors in the city and on Wall Street were expecting. Yeah. The guidance or implied guidance was insufficiently clear. Okay. And so the absence of confidence about growth in the fourth quarter gives you another reason to be concerned about growth, and that's another reason why a stock can fall. Okay, so that's the Wall Street Journal headline.
Yeah.
The Media Post headline is to say that there was an improvement over the second quarter, which is technically correct.
Yeah.
And the negative growth is because they got whacked by currencies.
Right.
Currencies had a negative 4% impact on revenues.
Yeah.
So it caused the actual reported revenues to be down. But Wall Street doesn't necessarily care, or investors don't necessarily care about foreign exchange because it's mostly predicted and it's outside of the control of management to the most part. So you don't blame them for that.
Yeah, okay. But interestingly as well, all the other stocks went down this week, right? So WPP, I think, were down 3% or something. We were just looking, IPG's already been affected, even though they haven't reported. Why are these stocks now, they're all moving together, right? Somebody publishes some strong results and they seem to rise with the tide and then fall with the tide.
Confidence in the underlying health or relative health of the sector, the agency sector, is informed with the reporting of individual companies. So if Publicis says that we're kind of weak, they didn't say those words, but if that is the interpretation, then if it's weaker than everyone expected, the read-through to every other company in the sector is that, oh, everyone else is probably weaker than expected, unless you go back to that new business data that might be wrong, unless the perception is that that new business data said that, oh, it's just specific to one agency.
Yeah. I can see why people come to you to try and help them understand what to do with their money, because you've got to fall down on one side of the fence, right? You've got to buy or sell or hold. Most of your ratings hold on most things.
Most of my ratings right now are actually hold, which means I'm only really optimistic on 3 of the 16 stocks that I cover. I've got sell ratings on 2 of the 16.
Yeah. Okay.
Most analysts have buys on most everything.
Hope you still get paid. So let's think. So there's been lots of talk. I was mentioning to you earlier, Professor Mark Ritson was the last kind of person to sit in this chair a week or so ago, and he kicked up a little bit of a fuss because he was basically ringing the death knell of the big holding companies, or suggesting that they might be in some kind of trouble. And his question is it the end for them? Are they kind of on now a decline? He was reacting to some comments that had been made at Adweek by Martin Cass. I'm sure you've heard of his interview where he was making some big bold claims about some of the big holding companies and their behaviour. How do you read that from an investor? Because if you're not an investor, but if you're advising investors, is the default investor position is normally one of optimism, isn't it? Because you want and you hope that there will be a rescue or recovery or a survival. How do you read that? Are you seeing that this is an ongoing decline, or can you see how CEO could turn this one around?
I subscribe to the cockroach theory. Okay. First postulated by Rashad Tabakawala, that agencies are cockroaches, not dinosaurs, that they will outlast us all, essentially. My observation is that they probably have a greater share of future entrepreneurs or past entrepreneurs than Silicon Valley companies have. Maybe there will be more billionaires out of Silicon Valley, but I bet fewer entrepreneurs. And that entrepreneurial capacity of individuals who work in agencies doesn't always serve them for good. See transparency issues. But for the most part, it creates an everlasting source of growth. At least that's my general view of the businesses and the individuals inside of the holding companies. And that does give me some reason for long-term optimism that they're not just in a state of permanent decline. There are many out there in the investment community who do think that they are set to continue declining, that maybe the non-transparent or alternative sources of revenue are actually very significant and going away, or that the marketers of the world are going to continue to compress what they're paying. They'll bring work in-house. I mean, there's plenty of these bear case scenarios that have something to them. But again, I have a sense of long-term optimism for the sector because I've seen how entrepreneurial they can be.
Yeah, and they're very good at adapting and often, I think, creating businesses ahead of the marketer's need. I mean, they're very good at speculating.
Or just in time to get paid.
Yeah, good. One of the things, we spoke a couple of weeks ago, actually, because a previous episode, was it last week? We talked about, where we talked about Accenture as a hypothetical, maybe making a bid for Publicis Group on the basis that the management consultancies or those kind of businesses might be interested in acquiring the groups. We realised how big some of these companies are. Accenture's like 5 times bigger than Publicis, I think. And I called Brian to say, what do you think? Is that crazy? Would Accenture buy Publicis? And you gave me some really good food for thought. So
I said, mais non.
No, exactly.
They're not French enough is the starting point.
Yeah.
No, I think that there is industrial logic, as we might say, behind an IT services firm or similar entity buying a large-scale collection of agency-like services. The match specifically, you mentioned, it seems highly unlikely, primarily because of the French factor.
Yeah. Although they do have, Accenture's CEO is French, somebody pointed out to me the other day. So maybe, who knows?
They're less of a French company than, say, a Capgemini.
Yeah.
And so the other thing to consider is that an Accenture in particular, it sounds like needs to be provoked, or probably needs to be provoked into doing something. And so the analysts who cover the IT services firms pretty generally believe that they're not going to just go out and bid for any given agency holding company. They'll continue with these smaller scale acquisitions. What I think is possible over an extended period of time, so to be clear, not next week, not next month, next year, or any predictable period of time necessarily, that you can imagine scenarios where either Havas inside of Vivendi or a Dentsu would want to add to, if you're Dentsu, creative networks, if you're Havas, broaden the media portfolio, and that leads you to one place, IPG. It's not that they're necessarily going to be bought anytime soon, but they're the one holding company that has a likely capacity to be bought. Again, making the view that Omnicom probably has too many fiefdoms and they're too independent of each other to seamlessly integrate with something like an Accenture. So you can imagine scenarios where maybe someone places a bid for an IPG, and then if you're an Accenture, you have to decide, well, do you want to be in or do you want to be in? And that's the point that would cause that something to happen. And then Capgemini's CEO said, I believe a couple of weeks ago, they would act if they thought Accenture would act. And that's where you get to the Publicis.
That sounds like a tinderbox, isn't it? That's going to be really exciting.
This could take years to play out. So you don't want to look at this as something that's likely anytime soon necessarily. But any one of these scenarios requires a catalyst. And what is a catalyst? It's impossible to know in advance.
Okay, very good. Well sat on the fence there. Shall I give you a bit of insight for your investors community? Because we did a poll as part of our Media Snack episode last week. So we asked all of the 506 viewers, who will Accenture buy next? And we gave 3 options, which is typically what we do. Obviously, Publicis, IPG, or whatever. We just kind of like, if you don't care. Shall I give you the results?
Of course.
52% agree with you, which is IPG. 5% said Publicis, so again, endorses you. But also interestingly, 40% of viewers just said don't care. So you can feed that back to Wall Street and let's see what happens to those stocks. The last thing I wanted to ask you, I mean, your world is investors, right? And stocks and these CEOs that I know you sit on these analyst calls and you kind of interview them and you ask them questions. What interface do you have with the marketing community? Do you, I know sometimes you reach out to marketers because you asked for insight. Do marketers come to you for a perspective? And what are you able to share? Like what kind of questions do marketers ask you?
They could be random questions like, for example, is this agency that I'm working with going to go out of business? It could very well be, what do you think about viewability? Or what are the solutions to this technical problem or that technical problem?
But they think that you're the font of all knowledge.
Sometimes. I mean, I may not know, but at least it prompts a question for me to try to answer with greater detail. So, hopefully it helps that we have no vested interest in what happens to them. We're not selling anything. And so I think that there are certain kinds of questions that industry participants can ask without fear of like being sold a bill of goods or being told something that where we have a vested interest, because we really don't. But the questions themselves usually prompt me to try to figure out an answer, and they help me know that this is something that individuals in the industry are thinking about. And so all of that then contributes to hopefully a little bit more insight on how the world's going to evolve.
Great, thank you very much.
Thank you.
Thank you for coming to chat to us. We're going now to the Media Snack 100 party, which will be attended by some CEOs from some of the companies that we've been talking about. So let's go and see what the appetite is.
Let's go.
Yeah, excellent. That's Media Snack Meets this time. See you next time.
See you.